Hey everyone, welcome back to Corporate Decoder. Today we're diving into a proxy statement from Accession, a company focused on environmental solutions. Usually these documents are drier than the Sahara, but this one has some potential twists that might make things interesting. We'll see if they manage to get all their ducks in a row for this year's annual meeting, or if there are some shareholder surprises waiting in the wings. Let's find out. This proxy statement is a document that the company provides to its shareholders so they can make informed decisions about key votes at the upcoming annual meeting happening in June. We're talking about things like electing board members, approving executive pay, and ratifying the company's choice of accounting firm. Think of it as the shareholders' manual for participating in the company's governance. Alright, let's jump into the business at hand. At the annual meeting, shareholders will be asked to vote on several key items, including the election of 6 directors. Stockholders also get a chance to give an advisory vote on executive compensation, the actual amount paid to top executives. They also vote on how often those advisory votes happen, and also vote on whether to approve the appointment of Moss Adams LLP as their accounting firm. Finally, they'll be voting on approving an amendment to the company's tax asset protection plan. The proxy statement emphasizes that this year's annual meeting will be virtual. This means shareholders can attend and vote online, which is convenient. It also mentions the record date for determining who is eligible to vote, which is April 7th. Robert Rasmus, the CEO, urges everyone to read the materials carefully. Okay, let's talk about the folks who want to be on the board. The company has nominated Laurie Bergman, Jeremy Blank, Richard Campbell Breeden, Carol Eicher, Julian McIntyre, and Robert Rasmus, the CEO. 2 current directors, Gilbert Lee and L. Spencer Wells, are not standing for re-election. The board thanks them for their service. Each nominee has a ton of experience, and the document highlights their qualifications from financial expertise to experience in the chemical industry. It's worth noting that directors are expected to attend all board meetings. The company said that currently the board consists of 6 independent directors. The board determined that Mr. Blank is not independent due to his affiliation with Community Fund. It is important because having a truly independent board ensures decisions are made in the best interest of shareholders, not just management or the related parties. Let's look at who owns the company. We have a list of the big shareholders, including the directors and executive officers. Julian McIntyre is sitting on a good position of 7.72% of the shares, and Jeremy Blank also owns a big chunk at 5.71%. It is good to know who are the key players. There were a few late filings to the SEC for trading activity. Jeremy Williamson had one late report. This kind of stuff happens. Alright, let's dive into the always interesting topic of executive pay. We have Robert Rasmus, Jeremy Williamson, and Joe Wong in the NEO group, which stands for Named Executive Officers. These are the top guys whose pay is being scrutinized. This table shows all the money that went to the top execs. For example, Robert Rasmus got $50,000 in salary for 2024, while in 2023 he got $21,054. In stock awards, he got $65,385 in 2023. This is important because shareholders get to vote on whether they approve of this compensation. Of these 8, video we're going to the going through $84 in 2023. This is important because shareholders get to vote on whether they approve of this compensation. They want to align the management's compensation with the performance of the company. So if the company does well, they get paid well. Makes sense. To figure out how much to pay their executives, the company looks at what similar companies are paying. They call these similar companies the peer group, and it includes companies like Ametis, AgroFresh Solutions, and CO Environmental. It is useful because you know that their compensations are in line with other competitors. The company also gives executives stock options and restricted stock. These are meant to encourage them to think about the long-term success of the company, and if the company does well, the stock rises, they make more money. For example, on February 27, 2024, the Compensation Committee approved grants of restricted stock awards and performance stock units to the NEOs to vest on August 1, 2024. Robert Rasmus got 3,571 shares and units. Interestingly, the company states it is not timing the release of sensitive information, so the top management gets the best awards. This table shows all the stock options and stock awards that the executives still have. As of December 31, 2024, Robert Rasmus had 333 exercisable options and another 666,667 that are unexercisable. There are guidelines for when executives can sell their stock. They encourage executives to own company stock. The ownership is calculated considering holdings of restricted stock, shares held in retirement accounts, and other shares. It is a good practice as the company does better, so does the executive. Now, it is a pay versus performance section. We will look at how well the CEO is compensated compared to the company's performance. The summary compensation table total for Mr. Rasmus was $115,385 in 2025 in 2024, and $1,011,039 in 2025, and $12 million in 2025, and $12 million in 2025, and $12 million in 2023. Compensation actually paid was $1,014.94. The net loss was roughly $5 million in 2025 and 2024, and $1,014.25 in 2024, and 45 annos in 2024, and 2044, and $12 million in 2025, and $25 in 2024, and $12 million in 2023. A great return with lower losses but lower pay. That is interesting in 2025. And $12 million in 2023, a great return with lower losses but lower pay. That is interesting 2023. Now, moving on, shareholders are being asked to ratify the appointment of Moss Adams LLP as the company's independent accounting firm. This is a standard procedure, just ensuring that the company's choice of auditor is up to snuff. The audit committee reviews the company's accounting practices. The audit committee recommended to the board that the audited consolidated financial statements for the fiscal years ended December 31, 2024 and 2023 be included in the company's annual report. Finally, the company wants to extend its tax asset protection plan. This plan is designed to protect the company's ability to use its tax benefits in the future, which could be limited if there's a big change in who owns the stock. If approved, this tax asset protection plan would extend until the end of 2026, unless certain events like a change in tax law or a decision by the board trigger an earlier expiration. So what's the story here? RQ is essentially asking its shareholders to rubber stamp the usual corporate governance stuff like electing directors and approving executive pay. The most interesting thing is the tax asset protection plan, which could have both positive and negative effects on the stock price and company strategy. Ultimately, whether you vote for or against these proposals depends on your view of the company's management and your appetite for risk. The financials aren't awful, but they aren't stellar, so they seem to be buying time with shareholders and hoping to become more profitable. As it stands today, I would only call them a moderate performer in the market, but with environmental concerns rising, they might have a chance to do better. Thanks for watching. If you found this helpful, like, comment, and subscribe for more.